Hey guys, welcome back. Thank you for tuning in. This particular topic is very, very important, especially for those of you guys who are, you know, always not on the charts. Okay, you can just come in on this particular day of the week, pick one trade, and you're done for that week. And it could be 3 days to 1 ratio, 5 days to 1 ratio, depends on your schedule. Friday setup, ICT Friday setup. The setup that happens almost every Friday. I put almost there because it's not something you should expect to happen every Friday, but almost every Friday. So I'm going to be showing you a couple of examples. I don't like doing one example. I don't like showing one example. If I show you one example, it means that that thing only occur once. But if I show you a couple of examples, it means that yeah, that thing occurs happens many times. So you just have to study it, add it to your journal, and wait for it to happen so you can pick the trade. All right. So you probably learned about power of three, the accumulation, manipulation, and distribution. For those of you who have been following this channel, you've very well learned about that, right? You know that very well. So this is how a candle looks like. Might be 1 minute, two, three, five, 10, any kind of time frame, even weekly time frame, daily time frame. This is how a candle looks like. Now we're going to be looking at the another side of this candle, like how possibly can we pick trees just looking at this candle on Friday. Now this is something happen. This something that happens in a week, right? Let's assume this candle is a weekly candle. Okay, this is a weekly candle that displays from Monday to Friday. Okay, so when it opens here during that Sunday midnight, okay, this is the opening price. Let's assume this is the opening price, or which we usually call the accumulation. Yeah, price accumulating at that moment. Then it manipulates to the downside, creating the low of the week, right? Then starts buying, becomes bullish for the rest of the week. Then drop at this high, which becomes the high of the week. The high of the week is mostly formed on Friday, so that's where we come in with our Friday setup, right? So after the high of the week is mostly formed on Friday, price does what? Price trades back into weekly range, which is now the close of that week and the close of the candle. Let me explain this thing again. Okay, so this is a weekly candle. Price opens here, let's say Sunday or Monday, whichever. Price opens there, that's accumulation, manipulates and distributes. Price creates the opening price there. That's the opening price there. Price drops down, probably taking a sell side liquidity or previous week low or something, creating the low of that week. The rest of the week is now bullish. So Monday, Tuesday, Wednesday, Thursday, you are looking for daily AMD. You are looking for daily power of three to pick your trade as an intraday trader. Then when it comes to Friday, where price creates the high of the week, price needs to trade back to weekly range, causing this particular week, leaving this particular week, and that is where our Friday setup comes in. Price close there. I don't even understand what I'm trying to say, but I'm going to use the chart now. Okay, so let's look at our first example. All right, this is weekly a week's data from this vertical line to where the chart stops. Don't mind this other vertical line. This vertical line is Friday. So Friday starts from there. This is the opening price. You can see this horizontal line there. I don't know if you are seeing that, but if you look at my cursor, you see it. This horizontal line, that's the opening price. So you can see where price opened during that Sunday. Monday, price dropped down, and the rest of the week was bullish. Now, what happens during that Friday? So Friday is still bullish. You can see Thursday was bearish, yeah. Friday bullish again, and we drop. This little drop is what causes that that retracement into weekly range. This little drop here on the candle, you can see this little drop here on Friday. From this vertical line to the right is Friday. Okay, so this little drop on Friday is what you see on this candle. What you see this forming the high and the close, right? So if you look at that, that's the high of the week, and which retraces back and price closed somewhere around there. But that is a very small movement. So how can we possibly pick trades from there? That's going to be your question, right? Well, I think I've thought about this particular strategy before, the intraday AMD setup. you've not learned that particular strategy, you need to go to this channel and find that particular video. Intraday MD setup comes in handy in many ways. So once it's Friday during PM, price need to do that retracement. Let's zoom in. So this is that. Okay, let me show you something. Price needs to do that retracement only after it has taken a buy side liquidity. Only after a buy side liquidity is raided. If there's no buy side liquidity, just imagine all these levels that have not taken any buy side liquidity, and you go on shorting here when there's a target above, you become the liquidity. So once price takes out a buy side liquidity, that's a call to attention. That's calling your attention. That's where you need to pick your charts and everything possibly to start looking for trades. So we zoom into that level. This is the buy side liquidity price took. That there is a buy side liquidity price took. We also have a sell side liquidity here, which is our potential target for this Friday setup. This is how you do it. So once price trade there, either the 5 minute time frame or the 15 minute time frame, I'll tell you now, stay away from 1 minute time frame. Run away from 1 minute time frame if you are still a beginner and you're still trying to learn how to read price newly. Stay away from 1 minute time frame. So for this setup, is either you use the 15 minute time frame or the 5 minute time frame. In this case, this is the 5 minute time frame. So once price took out that sell liquidity, I'm looking for a displacement, something that resembles the simple entry model. So you can see this is similar to simple entry model. The only difference here is that it's not taking any low. You can see it's not breaking any low, but this is more similar to intraday AMD. Yeah. So you want to find a fair value gap after price have taken out buy side liquidity on Friday during the PM or towards the PM. That's what I mean towards the PM. It's towards 11 o'clock. Towards 11 o'clock. That's when you're looking for this setup. New York time, 11 o'clock New York time. So you get that displacement there, that fair value gap, that's your entry. You take a sell straight to this sell side liquidity. And this could be, you see, your stop loss could be very small. It depends on the setup. I'm not saying you should tie stop loss. Always put your stop loss in an invalidated zone. In this case, this high is an invalidated zone. And you can see that price did not get to that high. So this could give you more than 6 risk to reward ratio. This is the Friday setup. It happens almost every week. So it doesn't be like I'm only showing you something that happens once. Let us go to another example. Right. Okay, so this is another example. You can see in this case, price opened here on this red vertical line. You can see my cursor. Price opened there, and this is the opening line, opening price. That's the opening price for that week, and price just swept this low just very little before buying, and you can see the rest of the week is bullish. So how do you find these setups? You want to find setups in a week that is like this, not a week that is consolidating, going back and forth. No, not that kind of week. You want to find setup in a week that is like this, that has a very slight bearish movement, then the rest of the week is bullish, or has a very slight bullish movement, then the rest of the week is bearish. Then you find this setup. So the same way you're looking for it in a bullish week, you can also do that in a bearish week, right? So now this is Friday. You can see this date here. That's where Friday starts, and we have a buy side liquidity that was left on Thursday, that old high, right? So we are expecting Friday to take that before expecting a sell off to the sell side liquidity. Let's zoom into that level and see what price does. Okay, so this is the buy side liquidity, and you can see this is oh, okay. This is where we are. So this is where Friday opened. You can see that that's where Friday opened, leaving a sell side liquidity and a buy side liquidity. So during New York AM, price swept that high. This is where it gets it confusing, because you'll be thinking this is a valid intraday AMD setup. You want to buy from this place. But that's very wrong. Remember, this is Friday and price needs to retrace to the weekly range. What are you expecting on Friday if the week is very, very bullish? During 11 a.m., this kind of year is 11 a.m. Exactly 11 a.m. So during 11 a.m. New York time, you're looking for a trade that will take you back to the weekly range. That you can sell to the weekly range. So you can see that price leaves that fair value gap. Now this is the new intraday MD to be looking to. to be looking at, not this one. This is the new intraday EMD to be looking at, not this one. You can see this is still 15 minutes. Price dropped that high there, high of the week. Leave that fair value gap. You can see this is not OT, this is not coach, this is not even simple entry model, this is nothing like that. This is intraday EMD setup. You go there and pick your trade. You can pick your trade at the consequent encroachment of that fair value gap. If it's too big, stop loss at this high. Then you sell off to where? Sell off to the sell side liquidity, the nearest sell side liquidity. Let's look at another example. Okay, so this is the opening of this week, remember, and this is the opening price. Friday, which is here, we have price there. Friday, price took out what? A high. After taking out a high, we are waiting for a displacement during that 11 a.m. to sell off back to the weekly range. Because the rest of the week is bullish, you can see where price open Monday, and you can see Tuesday, Wednesday, Thursday. The rest of the week is bullish. Friday needs to retrace. This is how it happens. If the week was, up, down, up, down, up, down, then you'll not be looking for this Friday setup on those kind of weeks. This does not happen only on Nasdaq. Trust me. Go to Euro USD, go to GBP USD, even go to cryptos. It happens on crypto. This is the setup for every asset, for any instrument. This is the setup. So let's zoom into that Friday price action. Okay, so this is Friday's price action. You can see the buy side liquidity. Price swept that exactly New York AM. This is the nearest sell side liquidity, which can be at target before market closes on Friday. Trust me, this particular setup, if I see this particular setup, I'm not saying you should do this, but once I see this particular setup on Friday, I go with times 2 of my normal risk. That's if I'm always risking 0.5%. This particular setup, I risk 1% because it's something that happens very well. This particular setup is like 99% win rate. It happens almost every time. All you just need to do is identify the perfect week. Don't go and look for a week that is, seek and destroy, that is going back and forth, up, down. No. You want to look for a week that is very bullish. Monday was bullish, Tuesday was bullish, Wednesday was bullish, Thursday was bullish. Then Friday will create the high of the week. You can see it here. This is the high of the week. After taking any buy side liquidity that is beside it, the buy side liquidity can be from Thursday, the buy side liquidity can be from that same Friday. But once price takes that out, we are trading back, we are retracing back to the weekly range, and that particular setup there is A plus. Trust me, A plus. It does not happen every week, but it happens most of the time. Now you can see that's the fair value gap price left there. You don't need to go to the lower time frame to look for entry here. You don't need to go to the lower time frame. On this 15-minute time frame here, I'll pick a very good entry. On this 15-minute time frame, what will I do? This fair value gap is too big and price consolidates here a lot. So I will pick you can see that's it there. Your Fib, you can use your Fibonacci and find the consequent encroachment. This is 1 level, 0.5 level, 0 level. That's 50% level. Okay, so the half of that fair value gap, that's where I'm picking my entries. I pick my entries here. There is no fair value gap here, so I can place my stop loss even above this high, this zero high, that place. My stop loss can be there. Why? Because I know very well that price is not coming back to that place. Why? You can see this. There's no fair value gap there. There's no need. Price have already created the high of the week. There is no need for price to go back up. The price is only dealing with this fair value gap here. So my stop loss can be just above here. Selling to where? Selling to the nearest sell side liquidity. That's it. Just before market closes at 4:45 or 4:59 p.m. New York session on Friday, you've already taken your profit. And this could be 3 weeks reward ratio, 4 weeks reward ratio, any amount is a good profit. And this is a constant Friday setup. If it's a bearish week, like the week opens and throughout the week, Monday was bearish, Tuesday was bearish, Thursday, Friday, and so forth, like that. On Friday, price will create the low of the week, not low of the day, but low of the week. After creating the low of the week, it will take out sell-side liquidity that will make price retrace back to the weekly range. Now that retracement to the weekly range, that's your Friday setup. That's the setup you should be looking for. So I wanted to make this lecture very short, very simple, and easy to understand. And so I've fulfilled my promise. I promised this lecture since last week. So I don't know what you do with this particular information. If you just, throw it to the bush or write it in your journal and go back to your chart and study this setup in any pair. Trust me, any pair you're trading. If Nasdaq is the only thing you trade, fine, study it. If GBP, USD, Euro USD, whatever is the only thing you trade, study this particular setup. So thank you for tuning in. I really, really much appreciate. Until next time, please be safe and subscribe if you haven't. Like this video because I will be dropping more content like this, more premium content. Okay, thank you.